Hello and welcome to traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is January 22 and we're starting from euro-dollar pair with Jakub Novak. But first, let's have a look on 5-minute chart for analyzing yesterday's transactions. Further decline became limited because the test of 1.0874 occurred during this sharp downward move of the MACD line from zero. Shortly after, another test took place, but this time MACD line went within the oversold area, provoking a buy signal. This eventually resulted in a price increase of over 20 bips. US data released last week kept euro-dollar pair within a horizontal channel, while the report on Germany's producer prices had no impact on market direction. Most likely volatility will be at the same low level today due to the empty macroeconomic calendar. For long positions, buy euro when the quote hits 1.0911 and take profit at the price of 1.0945. Growth will occur in continuation of the upward trend, which will occur if the pair breaks through 1.0911. When buying, make sure that the MACD line lies above zero, or it's starting to rise from it. Euro can also be bought after two consecutive price tests of 1.0889. But the MACD line should be in the oversold area, as only by that will the market reverse to 1.0911 and 1.0945. For short positions, sell euro when the quote reaches 1.0889 and take profit at the price of 1.0859. Pressure will return in case of failed consolidation at the daily high. When selling, make sure that the MACD line lies under zero or drops down from it. Euro can also be sold after two consecutive price tests of 1.0911, but the MACD line should be in the overbought area this time, as only by that will the market reverse to 1.0889 and 1.0859. It's time for GBPUSD, Dean Leo explains. GBPUSD is moving within a 5-week sideways channel between 1.2600 and 1.2800, consistently testing these boundaries. Currently, the price is stable above the middle level of 1.2700, indicating an increase in long positions with the range. On the 4-hour chart, we observed a similar cycle of movement from the RSI indicator, corresponding to price fluctuations within the sideways channel. Initially, the indicator nearly reached a low of RSI level below 30, which indicates an oversold conditions. Afterwards, a rebound followed. Currently, the indicator is moving above 50, indicating an increase in long positions. Meanwhile, the alligator's MAs are intertwined in the 4-hour chart. However, this consolidation only reflects a change in the cycle within the channel. In this situation, you may consider trading within the boundaries of the sideways channel, as the price could move towards the upper boundary of the channel at 1.2800. However, it's important to remember that a sideways channel represents a temporary price pattern, that leads to significant attention from speculators. Eventually, there will be impulsive moves that will signal the end of the channel and indicate the subsequent market direction. For this reason, it's advisable to consider breakout strategies. Complex indicator analysis suggests a bullish bias within the channel structure in the short-term and intraday periods. What about cross-currency pairs? For example, GBPJPY, Arif Makmur describes. With CCI indicator price movement on the 4-hour chart, GBPJPY cross-currency pairs which managed to break above its three main levels, -100, 0, and 100, and now moving around the 0-100 as well as confirmed by the price movement, which moves above its 30 MA. Then, as long as there is no weakness which breaks below the bottom of the fair value gap, there's a level of 186.07, then GBPJPY has the potential to strengthening until the level 188.88. And finally, here's Laurie Bailey with USDJPY currency pair focused. Let's have a look. On Friday, the USDJPY pair tried to break above the resistance level of 148.35. But it seems that this attempt was a false move because the closing price for the second consecutive day ended up below this level. This morning, the price continued to fall. The Marlin oscillator is supporting this downward move, indicating a firm reversal. The nearest target for the movement is the level of 146.24, where the balance line and the MACD line are located. Setting below the support level will be a key condition for a medium-term decline in the pair. In the previous review we made for the yen on the 18th, we mentioned that perhaps the pair's decline will not be as rapid, forming a triangle to allow a MACD line to approach the price. Indeed, the price consolidated below 148.35. for 2 days to wait for the indicator line to approach, and this morning it broke downward. The support of the MACD line is at the level of 147.28. Overcoming it will open the nearest bearish target. If the bears succeed, the price will continue to fall towards 144.95. The signal line of the Marlin oscillator has already entered negative territory, confirming the price's intention to intensify the decline. That's all for today. See you online soon, and good luck.